Why some people are moving their money out of banks and what a bail-in really means. Most of us think our money is safe in the bank. You get paid, it goes in your account, and you use it for bills, groceries, savings. Simple, right? But there's something many people don't know. In a financial emergency, your bank could legally use your money to save itself. It's called a bail-in. A bail-in happens when a bank is in deep trouble, like about to go bankrupt. And instead of getting help from the government, it helps itself, using the money from its own depositors. If you have more than $250,000 in a U.S. bank account, the amount above that might be frozen or turned into bank shares to keep the bank alive. Even if you have less than $250,000, which is insured by the FDIC, you could still lose access to your money for a while, be stuck waiting in long ATM lines, or be limited on how much you can take out. It's not just theory. Bail-ins have really happened. In Cyprus in 2013, people with big savings accounts lost up to 60% of their money almost overnight. In Greece in 2015, banks shut down. People could only take out small amounts of cash each day. In Lebanon from 2019 to today, banks are still limiting withdrawals. People's savings have been frozen for years. Other countries, like the US and many in Europe, have passed laws that allow bail-ins if banks fail. Right now, there are a few warning signs. Banks are under pressure. Many banks bought long-term bonds when interest rates were low. Now that rates are high, those bonds have lost value. Some banks are quietly sitting on big losses. Some banks have too much exposure to risky loans. Commercial real estate is shaky, and smaller regional banks are the most exposed. The U.S. government has a lot of debt. If a bunch of banks failed at once, it might not be able or willing to bail them all out like it did in 2008. The FDIC insurance fund has limits. It works well when a few banks fail. But if several big ones fail together, it might take time to cover everyone's money, even for those under $250,000. You don't need to panic, but it's smart to be prepared. Just like keeping a spare tire in your car, you can keep less than $250,000 in any one bank. Use 2 or more banks, just to spread things out. Have a little cash at home just in case. Look into other ways to hold value, like gold, Bitcoin, or treasury bonds. You don't need to go off-grid, just stay flexible. Most of the time, the banking system works fine. But when things go wrong, they tend to go wrong fast. Bail-ins aren't a conspiracy theory, they're real, and they're already legal in many places. Knowing how they work and planning ahead can help you stay calm, even if the system hits a rough patch.